Welcome back. I hope you're having a fantastic day. It is March the 2nd of 2022, and Bitcoin and the markets are having a good day today. Everything is in the green after a big red day in the stock market yesterday. Bitcoin has continued its run, and we were tracking a little pattern here that played out recently. So this area right here looks very similar to what's going on over here. So the question is, what is going to be the next move? Is Bitcoin going to rise up to the next level, or is it going to drop and retrace this whole recent move like it's been doing here for the last several weeks? Every time Bitcoin rises, it drops down and retraces that move. This is Bitcoin on the hourly. And this is that whole move that just retraced completely this whole range. And this area here looked very similar to this area over here. This area that we're currently in right now looks very similar to that area. So if it does repeat and retrace, what are we looking at? So the initial drop from the peak of the last range was about 25%. And I'm not saying it's going to do this. I'm just saying from a risk standpoint, this is what I'm looking at, because we obviously have a lot of resistance, 45,000. Bitcoin has not been able to get over that 45,000 range into 46. It's 45,890 over here on February 10th. And then this recent attempt was 45,320. We'll take a look at what's going on with that and why in a minute. But if it did drop 25%, that brings it back down to right around 35,000. So testing that bottom again. So the question is Bitcoin going to go and then try to touch this bottom one more time before any kind of continuation? And can you realistically expect any kind of real continuation of Bitcoin, given everything that's going on with the inflationary environment, with the conflict in Ukraine, the war in Ukraine, and the escalation of that? And why has Bitcoin jumped so much in the face of all of that? So obviously we had a lot of short covering going on, and what traders tend to do is they tend to go short down here, which is when you should be going long. And then they'll tend to go long up here, which is when you should be going short. So that's why you get these big wicks up and down, wiping out the shorts, wiping out the longs. Of course, there was speculation that some of this could have been Russia trying to rush into cryptocurrencies to evade sanctions. Not sure that is exactly what played into this. Maybe there's a little bit of that going on, but I think they were buying well before this. So if they're going to do anything, they're going to be selling and or trading their positions, which generally would move the market the other way, because you'd have net selling, not net buying going on in that scenario, because they have nothing to buy with. I think they loaded up their cryptocurrency treasury before this whole thing happened. So let's take a look at the daily and see what's going on here. And currently, the trend is we have our low, we have a higher low, we have our lower high right here. And right now we're working on an equal lower high. So the question is, where is this going to close, and how are we going to continue? How is Bitcoin going to continue from here? And again, we've been looking for that retrace where altcoins will follow and run. And that is what we are potentially seeing. If this continues to play out, we could see Bitcoin run up into that 55, 57,000 range. And then, like we talked about yesterday, we know if it exceeds that, it's going to be bull market on. If it does not, then we could potentially be into a longer term bear market. What does that look like? Well, it's the last one that we saw was 2017, 2018. And this is kind of the fractal that we've been following, that Bitcoin is kind of following, and how that plays out. And you can see what happens is generally you'll come down, Bitcoin will come down, touch the bottom several times, retrace, massive retraces. So these retraces here were, I mean, that was 100% pump right there. This one looks small. That was a 22% pump. This one right here was 49%. This right here was 47%. So all the way, it just kept on going. Then you have another one in the 23%. It just kept on going all the way till the final capitulation. That's the one thing that Bitcoin has not done yet in this recent declining market, this recent downtrend. There hasn't really been a capitulation. There's been several little consolidations and distribution sell-offs, but no real capitulation like you kind of saw here last year in 2021. And then back in 2019, that final capitulation. So we haven't really seen that, meaning that's where everybody just kind of gives up on Bitcoin and you have a big sell-off. And so far, these bounces have been right in line with what we've seen over there. That's only 38% that we've seen so far the last couple of pumps. These are only 31% pumps, whereas over here, even in the past cycle here of the previous bottoms, we had the same thing kind of going on, 30–40% pumps in this range over here to that June, July bottom. So these tend to get everybody excited, get people trapped going long, going short. They reverse real quick. But a lot of this usually is all part of that bear market structure to the bottom until you get the final reversal. So the real question everybody's looking at, is this a W pattern or is this going to be an M pattern? How is everything going to play out? And if you look at the 4-hour, you can kind of start to see a little bit more of a W pattern structure, or could this be an M pattern structure coming up? And then with the hourly, people are drawing out inverted head and shoulders and just all kinds of interesting things. But we've generally seen what happens here on these pumps. When we get up into this consolidation recently, it generally leads to that drop again. But this could very well continue on and rise up to the next level up here into that 47,000 range and retrace, the rest of this move here before we get another drop. And then ultimate test, back test to see if price continue on, will continue on. So that's Bitcoin. The markets are up today, and they're continuing with the bounce that coming off of yesterday's move, and big sell-off in the Dow. Then it popped, dropped, popped. So again, this is not bull market structure here. What this is this is reaction to Powell coming out today and saying that the Fed is only going to raise rates 1/4 point, 25 basis points, 1/4%. And they're going to think about a plan for reducing the balance sheet and doing those things. So they still have not stopped their purchasing completely of treasuries and mortgage-backed securities. They have not reduced the balance sheet at all. They're not even talking about when that's going to happen. They're going to wait and see how everything plays out. And they're only going to raise rates 1/4 point. And they seem to think that inflation will taper off by the end of the year somehow magically, with everything that's going on with the oil situation, with the grain situation over in Ukraine and Russia, and all of the fallout from that war and everything else that's happening. So the Fed is once again of the opinion that inflation is transitory, without saying that inflation is transitory. They are saying it is temporary and it's going to ease up this year. So we shall see, right? It'll be interesting to see if that happens. Not sure the economists and analysts around the world agree with that, but right now the market is up 700 points. Yesterday it was down 600 about this time. So the Dow is up 700 points, which is 2.1%. The S&P up 90 points, which is 2.11%. Dow 2.11, S&P 2.11. The NASDAQ up 1.79%. So markets are kind of all over the place. And, Chair Powell testified today, and he will be testifying again tomorrow. And he's calling the labor market extremely tight. He says that his remarks are part of mandatory appearances this week before the House and Senate. And he basically said the implications for the U.S. economy are highly uncertain, and we will be monitoring the situation closely. The near-term effect on the U.S. economy of the invasion in Ukraine and the ongoing war, the sanctions, and the events to come remain highly uncertain. Making appropriate monetary policy in this environment requires a recognition that the economy evolves in unexpected ways. We will need to be nimble in responding to the incoming data and the evolving outlook. The exact same thing he said last time. And he said that his recommendation to the board next week is going to be for a 25 basis point hike in rates. And again, the other thing that we're looking at in the news is the mortgage market. So with bonds, with the flight to safety and people looking for a safe play during this situation, bond yields went way down yesterday, back down to the 1.8% range. So mortgage rates dropped again, which the result was a flood of mortgage applications for refinances and things like that. So people are very sensitive to rates. They're watching them very closely, and they are on alert with their lenders. If rates drop, they're going to go and refinance. The other thing that's really interesting is talk about sanctioning Bitcoin cryptocurrency, or sanctioning the Russians when it comes to Bitcoin and cryptocurrency. So it'll be interesting to see how effective they can be with that to try to stop Russia and their oligarchs from laundering money through cryptocurrencies. So we'll just have to watch this, see how this evolves, and see if that's even possible. But that's the next thing. Bitcoin sanctions could be next, but most Russians won't care because they've already planned for this in advance. Like I said, Washington takes aim at Russia's access to digital cash as the US and its allies levy heavy punitive measures against Moscow. The concern is that the Kremlin, as well as other ancillary actors, are supporting the offensive on Ukraine and will evade sanctions via digital tokens, which are now owned or issued by central authority like a bank. Bitcoin, among other altcoins, is decentralized and borderless, which means that it doesn't respect national boundaries because there is no central authority to block transactions. Digital currencies are also considered to be censorship resistant. So we will see if they are able to have any kind of an effect or any kind of success in that regard, and how that all plays out. So that's what I'm looking at today. The altcoin market is kind of following along with Bitcoin, almost tick for tack. Ethereum, same exact kind of price pattern. Avalanche, this area here, same exact kind of price pattern. Everything is playing out very closely. So it's kind of that tipping point, whether we're going to see the cryptocurrency market as well as Bitcoin shoot for another leg up, or if this is just another step in the ladder on its way down. This is Aave, and you can see how price has just been kind of laddering itself down. Sushi's been kind of big moves here, but if you look at the top coins like Ethereum, it's just been kind of a ladder, pop up and then drop lower, pop up, drop lower, kind of laddering itself down, kind of like Bitcoin's been doing this whole run, just kind of consolidating, drop, consolidate, pop, drop, consolidate, drop. So it's kind of doing the same thing. This is the biggest pop we've had. Hopefully this is not the retrace that Bitcoin can put in, but it's facing a lot of headwinds right now. Very surprising that Bitcoin was able to pull up as much as it did, as quick as it did, given what's going on. But again, investors are rotating capital in and out of the markets. So stock markets are up today. Bitcoin's down a little bit. Yesterday, markets were down. Bitcoin was up a little bit. So it could be a little bit of a rotation of capital going on there. And then, of course, trapping traders long and short on these trades. So we'll just have to sit tight, watch. It's very uncertain times right now. We will need to wait and see what the Fed actually does when they meet next week. Obviously, we're going to have the inflation report come out. So I don't think Powell is going to shock the markets. I think in the uncertain times that we have right now and the delicacy of what he has to do to keep markets calm and stabilized, I don't think he's going to change course. I think he's going to do exactly what he said, come out with a quarter-point rate hike, and then say everything else is going to be decided as we move forward because times are so uncertain. So he's been given a bit of a pass, and he does not have to come out heavy-handed right now, although at some point they're going to have to move substantially to curb inflation. And right now they have an excuse. They have a pass because of what's going on. But the problem is they're just kicking the can down the road. Sooner or later, they're going to have to pull the rug out from under everybody, and there's going to have to be some more unwinding, and markets will price that in ahead of time. So as we move forward, markets are kind of on relief right now, and then probably we'll start to see a little bit more of the uncertainty priced in later as we go along. So these are the things I'm looking at, and I hope this video helps you. I will see you on the next video. Have a great day.